Well, it's kind of funny because you're a Colorado guy, right?
Correct.
And one of the first times I think I ever noticed you on Twitter, you had posted something. Let me share my screen here. Yeah, I'm pretty sure you had like gone on a hike or something to Crystal Mill.
Yeah.
Is that right?
Yeah, that was probably 2 years ago or so.
Yeah, I remember that a couple of years
Three
ago.
years ago. Yeah.
Yeah, around the pandemic. And
Yeah.
I remember seeing that because when I grew up in Alabama, it was a small town of about, I don't know, 14,000 in its heyday. At one time, it was the sock manufacturing capital of the world, hosiery mills. And there was this little smoky, it was called, we always called it Reva's because that was the name of like the manager.
Hmm.
Uh, Country Kitchen, that's what it was. Country Kitchen. And they had this image. It was pretty much similar to what you see right here on
Hmm.
the wall. And I just remember I would always, when I was a kid, I would go in there and I would look at that and I would make, man, that is just beautiful. And this is way before the internet age.
Yeah.
And it never had like a title on where it was. Nobody knew where it was. It was just one of those images she might have picked up in a yard sale and thrown on the wall. But the first time I ever saw that again was on your post, and that was
Oh,
actually the
that's
first
funny.
time I figured out where it is. So
Yeah, it's
uh
a crazy drive out to it too. You go up this like really narrow track road. It's, cliffs on one side. They
yeah,
people die there every year getting out
no
there.
kidding.
Yeah.
That's dangerous. But it's cool. It's a beautiful place. But well, listen, thanks so much for joining us tonight. Obviously for Trading Sim with the Simcast. We're glad to have you on. And I was thinking that we would just spend, I don't know, maybe like 35 minutes going over some things that I think are kind of important to new and budding traders at Trading Sim. We use a trading simulator that's it's not just for beginners. I mean, obviously, if you want to get back in there and kind of test strategies, it's certainly useful for advanced traders as well. But I would say by and large, most of our customer base are somebody who's just starting out. Maybe they're year one, year two, year three, trying to get the hang of and the feel of the markets. Maybe they've got a full-time job and they can't trade in the morning,
Okay.
um, or maybe they're international, and so it allows them to do replay in a realistic environment with everything from level two, time and sales, all that good stuff for many years, into the past, and basically can go back, say 2020 and pick Tesla and pick a day and hit play and it's just as realistic
Pretty
as if you
cool.
were trading
Yeah.
it. Yeah. And we've got Anchored VWAP thanks to you on our charts, and
Nice.
so I just wanted to kind of give that introduction, and hopefully we'll just have a nice little discussion. If that sounds good to you.
Perfect. Yeah.
Cool. Great. Well, I'll get to start off here with a question. I want to talk to you a little bit about routine. I'm actually I work full time at a sports academy, and I work with kids who have ADHD, things like that. And this plays into a lot of traders' minds as well, and our
I was gonna say
psychology.
a bunch of future traders there.
Exactly. Yeah. So how do you manage yourself on a daily basis, I would say? What's your routine like? And then, maybe we'll go into habits, some distractions that you've faced all your life as a trader since when was it? 93 when you kind of got
91,
started?
yeah.
91.
91.
Yeah.
Yeah.
Yeah. Talk to us a little bit about your routine.
Okay, so my routine is pretty much the same every day, regardless of market conditions. And the way I think to start it is really about 2:30 p.m. Eastern each day. That's when, I over the years I've noticed I don't really trade very well the last hour, hour and a half of the day, like putting new positions on. So I would be sitting there saying, well, what should I do? I'll start to prepare for the next day. So that's when my next day preparation begins. It's at that time that I'll go through a large list of stocks. Typically, right now it's about 200, 220 or so stocks each day. And I go through those and I look at them manually on six different time frames. I've got a weekly time frame, a daily time frame, a 65-minute, 30-minute, 10-minute, and a 5-minute time frame. So what I'm looking for is it's not necessarily what I'm looking for. In other words, I'm not looking necessarily for pullbacks. A lot of stocks I trade happen to have experienced a pullback, but I'm just kind of trying to observe the market and really listen to its message. So I take notes, a sheet of paper that looks like this, and right now it's pretty long because there's so many good setups out there. And I just jot down symbols that I think look worth exploring the next day. And I'll have two columns on there, kind of my A list, and then I'll just maybe set some alerts on those stocks. So that's from 2:30 till about 4 p.m. each day. Then at about 4 p.m. Eastern, I record a video for Alpha Trend subscribers that goes over the key ETFs. So I cover each day the S&P, the NASDAQ, the Russell 2000, the semiconductors, energy, banks. And that's just to kind of say, here's where we are, here's where it looks like we're heading. If you're long the S&P, here's where an intermediate term stop would go. So let me just back it up first, John, and explain that my time frame I should have started out with is that my time frame is that of a swing trader. So when I'm looking at stocks, I'm looking at stocks for trading the next day that hopefully I can trade and hold them for ideally up to a couple weeks. And then, as I go through that list and I come up with my A list, what's comprised on my A list are stocks that have, kind of most likely pulled back for 3 or 4. They're in a big uptrend, on a daily time frame, and the weekly time frame confirms that they've pulled back 3, 4 days, maybe gone sideways for a day or two, and then they're maybe getting ready to resume that upward momentum. So I'll look at, identify the trade, look at the potential risk reward, try to see if there's any earnings reports, or they're on my charts. They show when the earnings reports are due. So I make note of that and make sure that the stocks trade at least a 500,000 shares a day over the last 20 days. And then with those ideas, I kind of then from after record that video, I drill down into that list, my A list, to say what are the best of the best in there, and
And
then
you said this recording is done when? What time?
what the recording for the right after the market closes.
Right after the
Eh,
market closes. Okay,
yeah, so it's timely each day, obviously, and then I
gotcha.
do another recording with the stock ideas, and in those stock ideas, those are the A lists that I've whittled down even further, saying these are the best of the best looking setups for the next day. And
Gotcha.
here's where, so in those videos, I try to make them as educational as possible. It's not just, hey, buy this stock and set your stop here. It's more like, here's how this stock might be setting up for the next day.
Hmm.
And if it does this, here's how we would want to handle it and then set our stop. So that's how I start, how I end my day.
Okay.
Fast forward to the next morning. And typically at night,
And
I'll
just
look at,
just to kind of clarify,
yeah.
this is kind of what you're doing to prepare yourself so that perhaps the next morning all the legwork's done, you've got your watch list, your focus list narrowed down, and then you're kind of prepared, I guess.
Yeah,
Is that
exactly.
correct? Yeah.
Yeah.
Okay.
And later that night, if I'm bored, I'll look at stocks too and just try to see, is there anything I'm missing? Maybe go through a sector and just see
Yeah.
what's happening on in that group. But then next
Now, before
morning,
you skip, and
yeah,
I'm sorry to kind of
yeah,
interrupt
no,
you here,
no.
but before you skip, because these are things that are important to me, and I think they're growing in importance to a lot of traders. And I know you kind of started out as like a prop firm trader, and so a lot of traders will see the posts on Twitter like, oh, I've got a little sleep watch thing that like
Hmm.
tells me how much time I sleep. Maybe just touch a little bit on like your sleep patterns and how important that is to you. Do you do anything? Have you got any kind of routines, health routines or anything like that that helps you prepare?
Yeah. So, after I've got my, responsibilities done for the day, I typically we'll go to the gym, or if it's not the gym, then maybe we're in the season where I can kind of sneak away at the end of the day and go skiing as well.
Nice.
So I can do that, or walk the dog, simple stuff like that. I do yoga. That's beneficial to the mind as well as the body, I think.
Hmm.
I'm a very good sleeper. My wife is always lamenting that it's so easy for me to sleep.
Oh man,
Uh,
I'm jealous too.
yeah, but I get my sleep, so that's never an issue. I gave up alcohol,
Hmm.
um, so I do believe that you have to have there is a mind body connection, obviously, that you're going to be a better performer if the engine is well tuned, and
Right.
doing those things does that. So, important point. I eat healthy as well.
Mhm.
So, put the odds in your favor as much as you can. It's not just for trading, it's for whatever you're doing. It's just life, right? I mean, you want to
Right.
live as healthy as possible and be alert and ready for whatever is going on.
And you're a
So,
mountain time guy, so you have to
yeah.
wake up a little bit earlier, right?
Yeah, but at the same time, the market closes at 2 p.m., so that's
Well, that's
really
true.
nice.
Yeah.
Yeah.
Okay. I didn't think about that.
So the market opens at 7:30, and I'm generally a morning person anyway. I have been my whole life, so that's really easy for me. So in the morning, I try not to sit down in front of my machine until probably 8:45 Eastern, unless there's, a big economic number in the morning, the PPI, the CPI, or depending on what, jobs report, things like that. But I don't really, I've never really done well trading in the pre-market. The
Okay.
only thing I really like to do in the pre-market is, positions that I held overnight. If they're gapping, then I will watch them very closely and typically sell at least part of them if they've had a big move in the pre-market, because the pre-market is often very emotional money. And a lot of times it makes the high of the day that doesn't even show up on the daily time frame once the market opens. So that I'm alert for that. And I used to be there in front of the computer an hour and a half, 2 hours before the market opened. And then I would just be so anxious. I would start putting on trades in the pre-market and I would start losing money. So I said,
Interesting.
enough of that.
Well, that's interesting. If you don't mind, if we could just take a little pause there, because I've done the whole pre-market thing, and I've run the gamut in my trading from swing to pre-market, especially during COVID. When things were running like 400% in the pre-market and trying to day trade things. But I found myself doing the same exact thing. Is that the more time I spent in front of the computer screen, the more I felt I was susceptible to putting on trades that were, I guess, that lack discipline.
Yeah.
That weren't in my wheelhouse, that I didn't exactly have a strategy for. Maybe it was something that you get I get the twirly eyes. It's like you're seeing things that just really aren't there, and maybe you want them to be there. I mean, what would you say to a new trader as far as how much time they need to spend in front of a computer screen, trading the markets like that?
Well, a newer trader probably has no business being involved in the pre-market. And, because the liquidity is typically very light. And I'm talking for the average stock, not the high flyers that, do have that activity in the morning. If that's your game, then by all means, you need to be there. I trade, bigger stocks generally that are more sane and better liquidity, and they trade within the typical 9:30 to 4 p.m. hours. So if you're going to be a full-time trader, I think you should probably have your homework done the night before, and then 45 minutes before the market opens is generally is at least enough time for me. That what I'll do is I will skim headlines. So I get a couple of those morning newsletters, and I don't really read the articles behind them, but I try to see what's shaping the psychology of the market for the day. Are people talking about a bunch of upgrades in the semiconductors after a big run has occurred? If that's the case, I'm going to, that brings my radar up thinking, well, maybe we have a little bit of sell the news in here because these stocks have had a big run recently.
Now, is that something that could influence your decision from the focus list the night before, or is it something that, like you're saying, could put maybe, something on the radar that wasn't there the night before?
Generally, I stick to what was on my radar the night before because
Okay.
I've familiarized myself with how those stocks trade. I'm not a news trader. I don't get involved in the news of the day
Okay.
stocks. I will see those stocks and generally ignore them. It's never been what I'm good at. I find myself getting distracted by them, and I think with news stocks, that's a distraction to me. Is you read the news, and it's very difficult to look beyond the headline and make a decision about what you think it might mean.
Mhm.
So you might think, well, hey, the semiconductors are being upgraded today, so I should get involved and buy those. I think that's what most people would think. And then they look at it and say, why were the semiconductors down today? Everyone loved them.
Hmm.
Or this company reported better than expected earnings, and the stock gaps up in the morning and sells off later in the day. But we have to look at is, it was up 5 days in a row prior to that. There's some profit taking. So to me, it's more about I just want to trade a stock that's a little bit more sane, that doesn't have this big outside catalyst that might bring in all kinds of different money and programs. It's just more of just a setup off the charts, off the time frames, where I can get involved and say, this looks like here's where the momentum is starting to turn higher. That's where I'm going to get involved. But if I'm wrong, I'm simply going to set my stop and move on. That's it. There's just no ifs or buts about it. I'm not going to, start looking at news for the stock and say, well, wait a minute, what's going on with this company? That is what has cost me money in the past. I will, let's say I buy the stock at 22, it runs to 22.30, and then it pulls back and my stop is 21.75. And the worst thing you can do is cancel your stop and look at the headlines and say, well, they just reported earnings yesterday. The earnings were really good. So I'm going to give it down to 21 and a quarter. And then
Okay.
it goes down to 21 and a quarter. You say, hey, but then that company upgraded them. So maybe I'll just pull my stop in this because obviously it's an overreaction. And if I sell here, it's definitely going to be the low of the morning. So you just keep bullshitting yourself into
Yeah.
finding a much bigger loser eventually. So those are the distractions. So
Okay.
going back into the process is I just try to become aware of what's shaping the psychology of the market again. And I want to know, you know, to a degree, is Powell talking at 11 a.m. Eastern? At least I know there's
Right.
going to be something around that time where there might be larger volatility. So just be aware of the potential catalyst, but not let what he says influence me. So I don't turn on the
Right.
television. I haven't watched see I haven't, in the last
You're not a
5 years,
Kramer
I've
fan?
probably uh, I don't have anything against Kramer or any of them
Sure.
on there, but truthfully, for trading, it just has never helped me make money. In
Yeah.
fact, it's done the opposite. Especially earlier in my career when I wasn't as aware of my habits, I would have CNBC on because that's what you're supposed to do as a trader, and then I would hear something on television and then go make a move based on that and end up losing money on it. So I want those distractions away from me. I want my focus list. If something outside of my focus list moves, fine, so be it. I really
Got it.
don't, it doesn't bother me at all.
Within that process, let's just pretend like you've got and I'm just looking at your Twitter feed here. I'll go ahead and pull that up for the
Sure.
viewers. Yeah, so like let's just take an example here. You did buy some Bitcoin here recently, right? Was that on
Correct.
the
Yep.
and if I'm not mistaken, get my little annotation tool out here. Was it somewhere in this area or no?
Yep. Almost exactly right there. Yeah.
Okay, perfect. Well, let's just for just a hypothetical here. Let's kind of go back in time. Take me back to this day here. Like let's just say you've had your routine the night before. You're thinking, okay, Bitcoin is coming up on this anchored VWAP from over here.
Yep.
It's kind of into that confluence area. It's about to break out from that level, which if you do read the new book, which is absolutely fantastic, you'll kind of see examples of how to buy before the breakout.
Right.
So that was a very, really, really nice point that you made in the book there. And that's kind of how I knew you probably were buying somewhere in here. What would you do then the next morning? So I think as a new trader, oftentimes if this is kind of the breakout day or our buy day, we're
Hmm.
expecting it to happen that morning after you've checked the news, you've settled in to the desk. Maybe it's I don't, whenever it is 9:30, 9:45. Do you
Yep.
do you have any strategy then? You go down to say like a 2 hour or a 2 minute or a 5 minute. Maybe step us through a day when you're expecting to buy something, to take a position in something, and what does that process look like for you?
Sure. So on here, that on top is the weekly chart of Bitcoin. The one that you're circling on is the daily, and the
Hmm.
one to the bottom right is the 2 hour time frame. So I will look at that 2 hour time frame, and I'll try to, look and see. It's making higher lows leading up to the breakout. It keeps probing. That blue anchor was from the beginning of the year. So it's the year-to-date anchored volume weighted average price on that daily time frame. So
Okay.
I knew that energy was building. We had gotten back above the anchor from the ETF approval, which was the red anchor on that daily time frame. So once it got back above that, what it told me was, we saw a big run up in Bitcoin prior to the news that the ETFs were approved. The
Mhm.
day the ETFs were approved, Bitcoin sold off and continued to sell off for the next 2.5, 3 weeks. Well, what we do when we put that anchor, the red anchor on the daily time frame, is we say, well, who's in control from that point? As long as we're below that declining volume weighted average price, it means the average price that Bitcoin is traded at is higher than where the price is currently. So the average person is losing money. The average short seller is making money. So the sellers are in control. When it gets back above that, it says now the buyers are regaining control. But we're banging up against that year to date anchor. And then at where you just drew your arrow in, that's exactly where they took control. So I simply just buy there. I
Mhm.
was looking at thinking if this breakout fails, well, I forgot where. So that was at about 42.1. And I think I was looking at, or I'm sorry, 43.1 or so. And then I was going to get out of it if it dropped down to about 42.5. So
Got
I
you.
was thinking if it fails to break higher here, well, then I'm going to take my loss because I don't know what's going on with this thing.
And would you consider this just kind of based on some of the things I was reading in your book? Would you consider this a pinch? I'm kind of seeing some like, I don't
Yeah,
know if it would qualify for that or not, but maybe that's something that
it,
also
it
was in
definitely
play
did.
there.
So that pullback came all the way down to that green anchor on the daily time frame, and you can't see it there, but that green anchor began. It was the beginning of the move prior to the ETF approval. So that move occurred at about, I'm just trying to, I've got it actually up on my screen over here. So that move occurred at 27.5-ish. So
Okay.
the anchor from that point became the place where buyers came in and took control. So then I put that the purple anchor just off of the touch. Yep, exactly. So that purple anchor came up underneath it. And that is what you're talking about. That purple anchor became support.
Hmm.
So as it rallied off that green volume weighted average price, it pulled back a little bit and energy compressed in that little tight range before the break, and it compressed between the year-to-date anchored VWAP, the blue one above, and the purple one you just outlined. So the energy was compressing between there, meaning the buyers were, in control from that low point, the sellers were in control from the high point, and in between there, it was basically a knife fight between the buyers and sellers. Who was going to gain control? Well, the longer term time frame on the weekly time frame, we can see, the buyers were in control there. So it typically resolves in the direction of the longer term time frame, which is why my bias was to the upside. And as the buyers did gain control, it confirmed that here's where we know the buyers have control. It's their game to lose. So at this point, I consider it innocent till proven guilty. I
Hmm.
want to be involved. This is where the new trend emerges in my mind, and that's where I want to be involved in.
Wow, that's beautiful. Yeah, kind of like a perfect storm then of like all these confluence factors. The
Yep,
pinch, longer term time frames are trending up. Nice little pullback into that. And then just to kind of reiterate something that you do say in your book is that you do not like to buy pullbacks. You like to buy strength or momentum after the pullback. Is that correct?
absolutely. Don't buy the dip, buy strength after the dip.
Yeah.
And because otherwise you're going to just continue to, look at the weekly chart up above and from the anchor from that red, anyone who's buying the so-called pullback in there,
Hmm.
it took them, they're still not break even if they were early into that pullback. But
Right.
where did they gain control? Where did the buyers regain control when it broke back above that red anchor definitively? And that was over a year later. So
Yeah.
that wasn't just a pullback, that was a downtrend that occurred for over a year. And you don't know if it's going to be just a pullback or if it's going to rally. So my point is, as a retail trader, you don't have to catch the low to make money, and you don't have to be in there, guessing and fighting the institutional wave of selling. Let the institution sell it down to the point where another institution says enough's enough. We're going to start to provide support. Once they provide the support and we can see evidence the buyers are regaining control, it doesn't matter if we buy at 43,000 when the low of the pullback was 38,000. To
Mhm.
me, it's fine. I don't mind that missing that five, because look at the move that's occurred and how quick that move has occurred, once it did break higher.
Yeah, no, fantastic example there. And you do talk a lot about, you're looking to buy the momentum.
Yeah.
Um, so yeah, no, fantastic. Now, if you don't mind, then let's kind of go back maybe just a little bit more on and touching on like your process and the day
Yep.
or the day of a purchase, because this is something that I've struggled with, and I've only been trading since the end of 2018. So I started in 2019.
It's been a long
Um,
time. Yeah.
it's I'm still learning. I think it's a lifelong
Well,
learning
I am
process,
too.
but
Yeah.
yeah.
Right.
But one thing that I've often struggled with now, when I had beginner's luck, I would jump into momentum, and I didn't understand risk as well, and so
Right.
everybody has a little bit of beginner's luck, and but then over time I would buy things, and I didn't understand the market cycle and things like that, and it came back to haunt me, and it burned me a few times. And once you touch the stove, it's kind of like, ooh, I don't know when to jump in anymore. Um, for somebody who maybe hesitates, or maybe they're uncomfortable with jumping into something that has momentum, for example, like when would you recommend um purchasing this? And then is it one of those just like, hey, I'm going to buy this if it breaks above level, XYZ
Hmm.
for 44,000, something like that? Do you have a key level in mind, and then it's just like clockwork? Soon as it triggers that alert, or maybe you got a limit order or something like that, then you buy it? Or is it something that's kind of a feel thing? What's going through your mind that day as part of the process of a purchase?
Yeah, great question. So it continues with what's the routine? So the routine is that, when I sit down at my desk, let's say 45 minutes before the market opens, I'll spend 10, 15 minutes going through the headlines. Then at 9 p.m., 9 a.m. rather, I will start to go through my target list. And I'll look at those stocks and I'll look at one and say, well, it looks like if this one breaks above $43.50, that's where the momentum begins. So what I will do is say, the stock closed at $43.30. I might set an alert at $43.45. So I'll have, let's say, 6 to 8 stocks on my, really targeted list in the morning. And I might, no one can watch all those stocks first thing in the morning. So I won't wait for 43.50 to set the alert. Instead, I'll set the alert at 43.45, meaning, okay, now it's alerted me. It's traded at $43.45. It's approaching that level where I think the momentum might really come into it. So now I'll put that stock in my level two screen. I'll look at it on a 2 minute chart if it's in the first 30 minutes of the day, and I'll really start to watch that thing carefully. If instead it hits that 43.45 and pulls back down to 43.20, well, I'll reset the alert, forget about that one, and an alert for another stock I'm looking at might trigger.
Mhm.
And or sometimes in the morning, what can be frustrating is, you set 10 alerts and the market gaps up, all 10 alerts go off first thing. And they're going, what do I do? Do I buy them all? Do I buy none of them?
Right.
And so on those days, it's important to just kind of slow down and say, wait a minute, the market's a little bit ahead of itself maybe here. Typically, if you chase them on the open, you're going to get burned. So I will wait a little bit. I will instead say, okay, where was yesterday's volume weighted average price? If it pulls back down towards that, then I want to start to get interested in it. Or I'll
Mhm.
give it 15 minutes. If it's below the daily volume weighted average price, meaning it's pulling back a little bit. If it gets back above the daily volume weighted average price, that's often where I'll buy. So that's one of the strategies in the book is chase the gap or wait for VWAP. Another
Mhm.
strategy in there is using the second day, the prior day's VWAP. If it gaps up, pulls back a little bit to the prior day's VWAP, and it kind of bounces and finds buyers in there, it tells me, well, there's still leftover buyers from yesterday, which was an up day. But the sellers are taking a little bit of profit first thing here in the morning because we're below the daily VWAP. If we can rid ourselves of the sellers for today and it gets above today's VWAP, well, then I want to be a buyer. That's when I'm not chasing that gap. I'm not buying the pullback because it might fail. We have evidence the buyers are back in control. So then I'll buy that stock, set my stop maybe below the low of the day or something, late yesterday afternoon. There might have been a little spike low and set my stop below that. And then just, throughout the day, I continually reset alerts as different levels are violated, or I just want to watch another stock a little bit more carefully and, ideally take partial profits. So one of my main things is on day one of a move, I will use pivot points. So I'm talking traditional floor trader pivots, they call them.
Mm-hmm.
It's just a mathematical formula that comes up with pivot R1, R2, S1, S2. So if I'm long, and let's say the stock triggers at what did I say, 43.50, I buy it at 43.53. Daily R2 might be at 44.60.
Okay.
So if it runs all the way to 44.60, well, then I'll sell a third of it that day just to reduce my risk and say, now it feels good. I've locked a little bit of profit in. I've lowered my cost base. So it ran, let's say, what did we say, $1.20 or so.
Mm-hmm.
I've got 2/3 left. So I've lowered my cost basis by 40 cents. So even if my stop gets hit, I might, on the 2/3, I might break even overall. But I'm trying to reduce my risk because I've seen so many stocks run quickly the first day and then fail. And
Right.
then I'm left, with a full loss instead of saying, okay, I could have minimized it, so then I'll raise my stop on the 2/3. And it's about managing the trade and trying not to get too minute,
Mm-hmm.
not trying to set those stops based on the 1 minute time frame, but instead the 15-minute time frame.
Just as a, sorry, go ahead, finish
Yeah.
that.
Oh, just to make sure that I'm participating in what could ideally be a multi-day move.
Great. And that was kind of my follow-up question there was, do you think about like scenarios for each stock that you're interested in based on where you think they might go, how long you might want to campaign that stock? Like, is there ever a scenario where you might not take a third if it's a strong stock and it's breaking out or something like that, and you're thinking like, I think this has 20% potential. Maybe you got into it early like Bitcoin and you thinking it might could retest the prior high, something like that. Is how do
I
you?
took a third of Bitcoin off after it broke out and tested
Okay.
the prior high. It had a little bit of trouble initially at that 50,000. It pulled back a little bit and I sold some. And I put that on Twitter saying I sold a third here. I
Mm-hmm.
don't care if I gave it away. I'm reducing my risk, but if it fails, this is how I manage risk. And, with most stocks, what I'm trying to do is ideally hold them multiple days. And so when I look at it, so we can use Bitcoin again. I'll say, 50,000 was the prior peak. That isn't my price target, but it's a level I'm aware of that might become resistance. So
Mm-hmm.
in other words, I don't do price targets, but I look at it and say, it looks reasonable that it might get there, but I'm
Okay.
not going to, get locked into that $50,000 target. Let's say it goes to 49.7 and pulls back and drops all the way to 43,000. It's not like I'm not going to sell some because my price target was 50,000. So I think a lot of people just get focused on those price targets when
Mm-hmm.
they really don't mean anything. To me, it's a level of interest where supply might come in enough to slow the stock down. But I have an idea of where I think it has the potential to go and how that fits into how much risk I have. Does it seem like a good bet based on how much, is possibly there? So going from 43,000 to 50,000, and my risk in there was basically 1,000. So that was a very good risk reward.
Right.
But if I sold it at 41, well, then the risk reward meant nothing, right?
Mm-hmm.
Because it failed right from the start.
Fair enough. Fair enough. So you do you probably play those scenarios out, and then you just kind of stick to your system then, because it's it's obviously worked. And would you say those are pretty hard and fast rules that you abide by?
They are. I mean, occasionally, let's say we had a macro event come in and the market just starts selling off everything all at once.
Hmm.
And I've got some stocks that are maybe I bought them in the morning, I've taken a third off, and it looks like maybe the market is just going to cave in. Well, then I'll just sell my stocks and think, I don't want to give up my profits here. The market's caving in. I've got to be a little bit more alert. Where are we in the market cycle? So right now, it was February, today's Sunday the 18th. We this market has had this incredible 25% or so run off of the recent lows late last year. And, we're starting to see divergences. It's going up on lighter volume. The advanced decline line isn't as strong. And there's a lot of things that people are pointing to. This is a seasonally the weakest time of year.
Hmm.
So I'm not going to sell stocks because of that, but it tells me I'm going to be a little bit, I'm going to have my one foot out the door,
Right.
getting ready to say, we've got all these things stacked against us right now. The prices are still going higher, so I want to participate. But if things start to deteriorate a little bit in terms of price action, I'm going to be one of the first ones out.
Got you. Okay. Well, that makes sense. And for newer traders, it probably will take some time for that to sink in. But um, by and large, what would you say is the largest or the longest time frame that you're holding stocks? Are you more of an active, or is it months, 2 months?
No, the longest I typically, I mean, I have a little bit of stuff that I hold long term, but that's really not much to speak about. And my preferred time frame is really that of a swing trader. Ideally, I can hold stocks for generally 2 to 3 weeks. That seems to be the high end of it. Just by the time it's run out of energy, the pattern of higher highs and higher lows
Mhm.
is been interrupted, and the stock starts to turn sideways or lower. I do day trade. I don't prefer to day trade. I think I'm getting too old to day trade for the concentration level and a lot of reasons. Um,
I
but
know
but
that.
that's my sweet spot is that of a swing trader.
Fair enough. Yeah. Well, that's fantastic. If is there anything else? We've got Brian's his Twitter handle there on the screen for you guys. He's a great follow. Brian, really appreciate you coming on, and I'll give you a little plug here for the book for sure.
Okay.
It's been a fantastic read, and I don't want to make anybody jealous, but I did get an autograph copy, so I do appreciate that, man. That was really really nice of you. And yeah, if there's not anything else you'd like to say, we can go ahead and wrap it up, but take the last word there.
I think especially for newer traders, it's go slow, trade on paper with Tradingsim, and just get a feel for what you're going to make mistakes. Number one, you don't know what your strategy is yet, so develop that strategy using the simulation tools. Start to ease into it slowly. The market will be there. Everyone's in a hurry to make it all happen at once. But if you can get your process, understand your time frame, and really understand how to control risk. That's the most important thing, regardless of time frame, is risk management. Get that down. Don't let your losers turn into big mistakes that you regret, because they're so difficult to come back from, and they'll just waste so much money and mental capital as well. So know your time frame and manage risk. Understand the cyclical nature of the flows in money, and you'll be ahead of a lot of most people who just chase news stories and GameStop or whatever's hot.
Great wisdom, Brian. Appreciate it, man. And thanks so much for sharing your routine with us today.
Yeah, happy to. Thanks, John.
Thanks.